Hello and welcome to the How to Exit podcast. Today I'm here with Deborah Smith. Deborah Smith is the co-founder and CEO of the CenterCap Group, LLC, and heads the firm's strategic capital, mergers and acquisition, and execution efforts. Prior to forming the CenterCap Group, Ms. Smith was the co-head of M&A and senior managing director at CB Richard Ellis Investors. Ms. Smith has worked on mergers and acquisitions with Lehman Brothers, Wachovia Securities, Morgan Stanley, and she has been involved with more than $100 billion of mergers, acquisitions, and restructuring transactions. Welcome, Deborah. Thank you for being on the show. Let's just jump in. Tell us how you got into this space and how you like the origin story side of things. Let's just start there.
Sure. I'll work a little backwards. We started the CenterCap Group in 2009 in the great financial crisis. We can debate whether that was a good or a bad idea. It's good because we're still here. Bad, I think it could have been a lot easier if we started in a different time zone than what we did. But in any event, we did. And it was on the back of a belief that there wasn't enough advisors in this space who understood real estate, the product itself, that there were many banks and we were covered by many when we ran CB's global M&A effort. And we felt a lot of them were much more transaction oriented. They were very high level in their approach and didn't approach it from the buy side. And we were approaching it from the buy side. We had just come from the buy side. And so we were making investments and deploying investors' capital on their behalf. And so the decisions we made had real consequences. And so we wanted to leverage that expertise in our view of the world in a different way. And so we began the CenterCap Group. And coming into that time, pre-CB, we had worked at Lehman Brothers on essentially REIT transactions in the public markets. So with that background too, we didn't feel we could move into working with REITs on our own, A, because we didn't have a balance sheet, and B, the public markets were doing horrendously poor during the great financial crisis. So we ended up going onto the private side instead and focused on capital raising in the private context. And we focused on M&A, which was started out to be owners and operators of real estate, but also investment managers of folks who managed the real estate, and looked around and didn't see a whole lot of competition there. So let's give it a go. If I look back to when we started and what we went through, I think we're out of our minds, honestly. We were totally crazy. And I don't think we fully, I'd love to say we were, super smart about starting our own firm and building it out, but it was more a case of, well, what do we need to do? If we're going to do this, what am I going to do now? And when we took in our first client, it's like, well, now I need a bank account. Now I need a company name. Now, we need stuff. If we're going to give this a go. And we kind of just put the milestones in front of us and progressed forward on the basis of, I don't think we ever thought we couldn't succeed. It just never crossed our mind. This is what we were doing. We'd made the decision to do it, and this is how it was going to be. We have been talking about it for some time. And if you think about it, the concept of what we're talking about here is REIT roll-ups, of contributing your assets to a structure and then using it for growth, is in many ways the foundation of the REIT industry. And we can go through many of the REITs in the public markets, that's where they came from. That you had a manager that had one property and they owned half of it, maybe they owned all of it. And then there's another asset. But these are all separated into their own SPEs that it's hard to, unless you're going to cross-collateralize, how do you get the value of the portfolio itself that it brings, right? On the basis that 1 + 1 is 3. And how do you do that in a tax-efficient way? And so a lot of the conversations we're having with owner-operators today, and they're owning a big portfolio of assets, either on their own behalf or for usually high net worth, it's usually high net worth investors, is to contribute those assets into a REIT, and you take back OP units, so it's tax efficient, and then you don't trigger any taxes until the assets are, you've moved them up and you switched your stock into REIT stock and sold it. And they had a real estate portfolio, and we actually acquired a real estate subsidiary out of a broader conglomerate, where the conglomerate just decided that they did not want to be in the real estate space. They didn't want to be in the investment management space at all. The business, as a result, so they decided to divest it. And then we were fortunate enough to acquire it. We took the entire management team with it and moved it over. But that was the concept there, is that someone, didn't place the value on it, and our client did. And so it was a natural transfer for it to be spun out and moved into our company of our client. Maybe our entire concept of top 25 multifamily markets is due for an overhaul, because those top 25 today are not the same as they were a year ago, right? We've seen Florida and Texas and these southern markets that have really taken off. Well, that's going to have impact on office, on industrial, on data centers. All of these things will be impacted as a result. Now, then the question becomes, where are they moving? Is it permanent? How the changes, how long they will last. And I think we're seeing that play out. But for us as a firm, it turns out to be great, because, we had written over a year ago about the impact on cold storage industry, more than a year ago. And all of those messages we were talking about have turned out to be correct. At least in our minds, they've turned out to be correct. But the cold storage industry there's a lot of interest in it, institutional interest, and there's a shortage of cold storage space. And so that's a really cool space, for an advisor to be playing in right now, because there's operators and there's capital, and there's a wonderful opportunity to pair the two.
Acquiring a logistics company or real estate that can be converted to cold storage slash last mile sounds like a hot field to look at.
Well, there's plenty. You see some of the bigger institutions, even turning old dark malls, where the malls, because, we've talked about the death of malls for years, but converting those now to logistics, or they're turning it to industrial centers in order to accommodate the gravitation towards e-commerce. And I think the underlying element to all of it, if I had to pick one thing, it's COVID has given people a sense that they can demand convenience. It's all about convenience, right? It's about, we reevaluate work-life practices and commuting to an office. Why? Well, why should we travel 2 hours to an office when I'm just as efficient here at home? What do I need to do that for? I can do 2 hours extra work here and do it just as well.
I've never really analyzed the commercial side. There's an ebb and flow inside of the commercial side too, or?
Yeah, it tends to flow again with the trends of where things are. But with the real estate market has been so heated, since the great financial crisis, the real estate market has only gone up. It's only gone up. And so in the past that many years, 12, 13 years, folks that have been in the real estate market or entered it 12, 13 years ago have never seen the market in anything but great. And, over the last 2 years with COVID, it for the most part, and I know on the newspapers we talk about what's going on with malls, and we talk about hotels, but outside of those, the market has performed really strongly, and pricing is expensive. Things are expensive now. And so, how that gets impacted with these next things will be interesting. But as a due for a correction, or whether this correction will come from one of these two things, that's still playing out. We will eventually write something on this, but once we have a stronger handle on how things are playing. But so far, we're not seeing a whole lot of impact yet.